This call is now being recorded.
Thank you. I'm sharing the screen. I want to share from TradingView. Okay, we are on TradingView now. I want to go to Solana, a USDT. Yes. And you can see I'm just sharing. This is on TradingView. I'm looking for the chart of Solana USD. We are not inside Royal Q now. So I can see this is Sol USDT. This is a market that we are trading, the spot market. And then you can see spot crypto. Remember, in your own Binance, you are trading from the spot wallet with Royal Q on the martingale strategy for the spot. So now I'm selecting that particular pair, and I just want to show business partners what we're getting ready to do here. We're going to go with the information of business partner Messi. I'm going to ask for the average price on your position. Did I Messi? Average price on your position. You will click on Solana, click on more, or rather you'll click on more on Solana, and then you'll click on the numbers of call margin, or margin call there, and then or even if actually after clicking on more, you will see the average price before you even go to transaction page. So you click on Solana, you click on more information will appear there, where you will see average price of the current position. I want us to work based on that, and then
it's 104, leader.
Thank you. 104, and then point.
Let me just go back there again.
Yes.
It's which one you want now?
Average price only.
It's 104.
Point.
11.
Thank you. That is important. It doesn't just change unless if the robot buys more. So now you can come back to the screen.
Okay.
Okay, that is the Solana market. I'm just deleting what we don't need on the screen. Let me go to an 1 hour time frame. Yes. I think this is going to help. Yes, so now at the moment, this is where we are with our Solana market position that we've started not long ago. It's a one shot, for instance, with business partner Messi. So now Messi, what you can see here is that the yellow or the orange line, sorry, is the average price. You see, you said it's 104.11. Remember, here we can see it.
Yes, I can see.
Thank you. So it means the current hour. This is an hourly time frame. The current hour that I've just started only has about 10 minutes. 10 minutes now, because now it's 10 minutes past. Now it's 10 minutes past 8. So it means a new candlestick we are seeing here. It has just started. This particular candlestick has just started, and it has 10 minutes or 11 minutes or so now. So And then this can also mean that when you started trading, you must have started trading, because this, if this particular candlestick here is for 20 hours, for instance, it's for 20 hours, it's for now. It means now we are now 11 minutes, you know, from 8. And then, so it means this one is for 19, and this one is for the red one, this one. Let me just quickly use an arrow. It means this particular candlestick here. I want to mark it nicely. I'm using my clicker, please bear with me.
Okay.
This particular candlestick here. This one, the red one, is for 18 hours. And then because it's 18, 19, and then 20, where we are. This particular, the current one, where the market is currently moving at, the red dotted lines there. So now what is showing us here, Messi, is that when you started the trade of Solana, it was around minutes past, some minutes past 18 hours. And I remember our appointment was for 18 hours, remember?
Yeah.
Yes. So now we are doing this so that we sort of understand how to read the candlesticks and the price movement, so that we trace with peace of mind. So now what we are then learning from here is that, after you have entered the market, somewhere there, which is where the price, the orange line is. After you've entered the market, the average price was at $104.11. So the price did not move upwards, In fact, the price kept on falling. It kept on going down. That is the reason why at the moment the price is around the line that I'm showing you here, which is around at the moment it's around $102.38, and so which means the price fell. So now what we're going to do, we're going to check the percentage here, the rate at which the price fell here. This is what we're going to check there.
All right.
This is going to show us the return rate, for instance. So now this is what it's open for everybody to see how actually the price is moving in the market. I just went to the leading charting platform, or where you can see graphs or the charts of the different things, whether it be forex, stocks, commodities, and so forth. You see, cryptocurrencies. That's where we are now. So I'm going to measure the percentage or the distance from the orange line to there, and so that we are able to see the rate exactly, how much percentage do we have there. I will just for now use a measure there, and then that is going to show us nicely. Oh, the green line up to the green line, because the price is changing direction. So now at the moment, this is what we see. This is what we see, the percentage here. It means Leader Messi, if when you go to your Royal Q, you will see that the return rate is around minus 1.626163, somewhere there. So
Okay.
I'm sure. Are you able to check it? Just go to there, and or you will share the screen actually for us to see also.
Okay.
So check, it's around minus 1.6%. You just check and then you confirm. Oh, okay. Okay, so you're sharing the screen now, right?
Yeah.
Oh, okay. Let me stop sharing on my side. That's good. Okay, that's good. It's fine. Now, that's exactly what we spoke of. Can you see now the return rate there?
Yeah. It's going to minus 1.65 now.
Yes.
Plus
So
1.62.
So
Yeah.
now with what we have seen from the chart and the calculation that we have made of return rate, so now it shows clearly that the readings we see on Royal Q are readings that are actually retrieved from a live chart, and then the accuracy also of Royal Q in calculating all this information in real time. So you are able to see where the average price was. Like for instance, it's, as we can see on your screen there, is 104.11, which is average price. They are showing us the message that is inside the brackets USDT. So which means this is $104.11, you see? Because we know that USDT is equivalent to $1. So then our price at which we entered the market, the asset, which is Solana, the crypto asset, was actually selling at a market price of $104.11. However, the current price, if you can slide down a bit the page, we're going to see on top there. Yes, at the moment, the market, you can see SOL stroke USDT. Moving to the right, you can see the price 102.29.
Yes.
That one is the current price of the asset. So Solana at the moment is selling at $102.25. So we bought it at $104.11. That's what actually we entered at that point. I think Solana was around 7% upwards when we entered that particular coin when you wanted to trade it. So now here, the information that is important is that we know and sort of we have an understanding of how the average price is shown on a chart, like on a crypto chart in the spot market. We have seen, and then on the chart that I have indicated on TradingView, it shows us that the price actually at the moment, the current price is below the average price, because $104 is more than $102. So which means then we bought it expensive and now it's cheaper. Therefore, we cannot make profit from this asset because we used a lot of money to acquire it. And at the moment, the market is selling it for less than what we bought it at. So as a result, then we are obligated to hold on to the position. However, with our strategy of trading with the martingale strategy here is that we already have 2 margin calls on this particular trade that are going to be placed provided the market continues to fall. Meaning that first call, when return rate is around 3.5% on this position, may you please click on numbers of call margin? Yes, and let's click on trade setting at the bottom left. And then we can go to margin configuration.
Yeah.
Margin configuration, yes. So now business partners can see the margin configuration page. It's appearing. So this margin configuration is what we have set ourselves so that as like for those who can see, it's divided into two columns. The column on the left-hand side has a heading of margin call drop. Drop there, we mean fall or depreciation of the asset, or when the price reduces from what it was, and then that is a drop. Because why are we saying drop? Because remember, we entered at a price of $104.11, but now the market is selling at $102. That is a drop, but that drop is around 1.6%. However, what we want is for the robot to execute a margin call, meaning to buy again on top of what we have of Solana, to buy again after 3.5% drop. So when 3.5% has been reached, the robot is going to buy according to multiple buy-in ratio. You can see on the right-hand side there, the table gives us 1 times for the first call, and again 1 times for the second call. That 1 times is according to the first buy-in amount. The first buy-in amount is $12. It means now our parameters are giving an instruction to the robot to say, once 3.5% dip has been achieved, put more money into this, which is going to be $12 times 1, it's $12. If we wanted to put $24 for the first call, it means we're going to put 2 here. Then it was going to be $12 times 2 gives us $24. It means there's more money to buy more asset after 3.5% dip, you know. However, this one shot has been set for an amount of $36. Hence, the first buy-in amount is $12, or I can say 36 divided by 12 gives us 3. You know, it's equals to 3. So it means we have $12 that we can use to trade any coin with this particular strategy. So at the moment, $12 has been put into Solana, and then we can't just put our money at once, because if at the moment we are floating with minus 1.6% with $12, imagine if we had gone in with the whole $36, which is possible. We could have gone in at once with $36, so it means now the floating loss was going to be bigger than what we have now. But because we didn't rush to put all our money at once, we still have an opportunity to leverage on the dollar cost averaging, which is quantitative trading. We buy certain quantities at certain price levels at the lower prices, you know, at certain lower prices compared to what we bought at previously. What is the aim here? The aim is to increase our quantity of the coin, because the bigger the quantity, the bigger will the dollar value be. The quantity that you have multiplied by the market price of the asset you are trading is going to give you the dollar value, for instance. Listen, that is what is happening. It means at the moment, if you are to buy 1 Solana, a unit of Solana, you will need $102. But earlier, maybe around 18 hours, around 6 o'clock, you would have bought that with $104. So if someone could have tipped you to say, I think this is going to fall further, wait, you can save $2. You know, you can save $2 and buy it at 102 instead of 104. You could have waited, and now you are going to buy a unit, 1 Solana, so to speak, with $102. You see?
Okay.
Yes. So this is what trading is all about. So now the difference in prices is where our profits get generated. And the good thing with Royal Q trading strategy on the spot market is that we don't sell our crypto assets or the quantities that we have acquired at the loss or in the negative. No, we don't do that. What we do is we rather open more margin calls. At the moment, we have first call, we have second call here, which are yet to be taken because the percentage has not dropped to where we want it. So this is the power of the execution platform, of the robot, placing orders in a way that becomes more advantageous to us as users, because the robot does not sleep. Immediately when 3.5% is realized, the robot is going to place our instruction there for the first call to buy with another $12. Therefore, we're going to get more quantity compared to when we would have bought it at $104. So that is what actually is happening with this method of trading. So if there's more money to trade, what we will do is we're going to increase the first buying amount to become bigger, or we're going to come here and open more margin calls. That is call number 3, call number 4, number 5, and so forth. As a matter of fact, Royal Q can trade up to 999 times in terms of margin calls. So the determining factor here is the capital that you trade with. You can open so many margin calls, and for the robot to be buying and selling as movement happens, you can do that. So this is the beauty of having an execution platform. And we use this method that we are using at the moment because capital is the one that will actually somehow dictate your strategy. And that's what is happening. So when you are becoming better in trading, what you will do is you'll always go for the coins that you think they will pump further. Even though, yes, we believed that Solana was still going to go up. Remember, when you chose Solana, I didn't have an issue with it because it was at 7%. And I also wanted you to have confidence in selecting the coin that you want to trade according to the template that we have for the My Strategy setting. So that you are able to pick any coin and then trade it after the robot has sold, for instance, for your one shot. So this is what is happening. You will see as you become more effective or confident in trading with this, in future, more margin calls will be open. And in future, you'll be even handling a bigger account. You'll be trading with more than maybe $5,000, doing so much more on different coins and opening more margin calls for certain coins and having limited calls on certain coins because of the plan that you're going to be having for each coin. Because by then, you're also going to have some sort of a good understanding of different coins and how they move. For instance, today we saw OM was more than 50% up. Can you please go to homepage? Let's look at where it is now. Let's look at where it is now, because we might have been tempted to say, let's go into it. It made 50%, it can go to 60%. But let's check where it is at the moment.
36.
36. Now imagine, it was around 50-something%. It means it's more than 20% deep.
Yeah.
So now imagine if you would have opted to trade in that particular coin. So the return rate that you see now of minus 1.6% on your Solana could have actually became a minus 20%. Can you see how serious that can be emotionally?
Yeah.
So this is the joy of trading. This is the joy of trading. And I remember when you went into Solana, it was showing plus 7% instead of plus 5.7% that we see now.
Yeah.
So that's what is happening. And it doesn't mean that these coins are going to follow this sequence that we see there. It's possible that a certain coin can come from at the bottom of this list, and you can find that it's even above OM, for instance. That is the mystery of the crypto space, because what determines increase in price is the amount of money that goes into that particular asset, or into that particular market, for instance, supply and demand. So that's what actually determines changes in price. So as a trader in your own smartphone, you try your best not to be emotionally attached to this. What you do is take trades that you can take and hold on to positions with understanding that, yes, you are trading with a certain amount of money and you are holding a certain position. Like the position that we know now, Solana, that you are trading there, you started trading it at a price of $104.11. $104.11. But at the moment, we can see last price of Solana there shows us $102.71, 72 cents. So it means from the time you entered, the market went down. And then overall performance, Messi, of Solana at the moment in the last 24 hours, according to the change column, it shows us that it's 5%, it's plus 5%. But you know that plus 5% from when you entered, it was plus 7%. So there's been a fall from the time you entered. However, somebody who enters Solana now can experience a floating profit instead of a floating loss. So the time at which we enter the market and the price that we buy at determines your overall position at the end of the day. So, and this is the joy of trading. And that is why, as you become passionate about trading, you can't just trade alone. You then find yourself sharing this opportunity with other people, because what causes change in those percentages are people who are either buying or selling. So you bought, and then some are selling, or some can buy some more. And when they buy some more, the coin will keep on increasing, and then you find yourself now going into profit. That is what is happening there. So now the beauty of dollar cost averaging is that when your first margin call is taken, it means another $12 will go into your position, and then your average price, Messi, will change from $104. Your average price will change from $104 to something lesser than $104, and thereby coming closer or reducing the gap between the market price. Market price of Solana we are all watching now is 102.75, meaning $102.74. So there's something that we want to show people, Messi, by clicking on the strategy, just so that people can understand the basics of trading, and then we do it with peace of mind. Now click on strategy. Now click on numbers of call margin there for Solana. I just want to show you what we mean by saying that the average price is going to get reduced. The average price we all can see is $104.11. It does not change, business partners. Average price stays the same until you decide to buy more. It is when you buy more that a new price is going to be shown. Remember, you bought at $104.11. If you buy now, a new price is going to come forth, which may be around $102.76 or so. And then the new price plus the previous average price brought together, divide that by 2, will give us a new average price. And that new average price will be lesser than $104. It means when it gets lesser than $104, it means now the distance between market price and average price of the new quantity that would have been added with $12 or any amount that you buy with, the distance between the current price and the average price will be shorter, meaning that the return rate percentage will now become smaller than what you see now, which gives you better chance of going into profit, So that's what is happening. Hence, we say people who have money make more money because they always have liquidity. They always have cash flow, like money to take advantage of opportunities to buy when markets fall. So now, for you to see the next average price that will happen, that is if we were to buy now, for instance, of which we are not buying now because we know we're waiting for 3.5%. May you please click on buy. This is for demonstration purposes. We're not going to buy now. Click on buy and then click on market price. Yes, and then where there's a cursor there, click there and then numpad will appear there. Yes. Now what you're going to do, let's put 1, 2. That is for $12. Yes. So now after you've done this, can you see, just use your eyes now. Can you see that estimated average price is now 103.4?
Yes.
You can see that, right?
103.41.
Yes, that is correct. So, however, the real average price is on top there. It's just below position amount. Can you see?
104.11.
Thank you. Thank you. So now what does that mean? It means because you are putting more money, into this, new average price is going to be achieved. And that average price will be closer to the market price.
All right.
That is why 103 it's getting closer to 102, because when you are to sell now, Leader Messi, by law, by contract, when you are to sell now, you're not going to sell at 104. You can't do things the way you desire. No. You can't just say, no, I bought it at 104. I want to sell it at 100. No, you can't. It's like buying a house somewhere in South Africa. And then after you bought a house, maybe in a suburban area, and after you've done that, then informal settlement emerges. A squatter camp begins to be there now. People begin to, your area now is surrounded by squatter camps. What will happen is the value of your house will drop. Even if you might have bought it at 2 million, the market now will dictate that no, that house will be sold with something lesser than that 2 million. No matter what you do, it will be a market that will be dictating to you that the value at the moment, it's no longer what it used to be, because when you bought, conditions were good. But now you have the property, it's yours, and it has depreciated in value. Still the same size of property, no renovations were done and so forth. It's not vandalized. It's still good property that you bought at the price you bought at. But because of the market conditions have changed now, because of those squatter camps, I'm just giving an example, you see? Now, the property is now cheaper. Or maybe because your country now it's a war zone and now people prefer to be in other countries instead of your country. I'm just giving an example. So that is what is happening with market dynamics. Hence, anybody goes into any volatile asset, not really knowing what's going to happen with that asset. So it's beautiful. So there, I just wanted to show you the effect of buying again, and that is dollar cost averaging. So that is how powerful it is. And not only that, apart from average price, can you see estimated profit and loss? Yes. Can you see it?
Yes, I can.
It's minus
0.67%.
Yes, that one is the estimated one after a deal is done. After the $12 has been put into the market, your return rate will change from minus 1.42 to minus 0.67. So, which is something that is more advantageous to you as a trader, because now your negatives reduce because you are putting more money. You are buying more quantity.
Okay.
You are buying more quantity. So this is exactly what is happening with the power of quantitative trading. And that is why each and every trader must make it their own goal, their aim, their focus to do what? To increase trading capital, so that you always have an opportunity to buy more when markets fall. You know, you have an opportunity to buy more, and that makes a huge difference. It makes a huge difference. Just like that particular coin we saw of OM, after it fell by 20%, other people will go back into that, and they may stand a chance to even collect another 5% up. And imagine they may be going with big money into that market. 5% they collect, and they are out. They don't worry about what happens later. They are collecting profits and they move on. And that is how trading is. So this is just to show you the calculation cost. Royal Q has provided everything here to calculate for you, just to have an idea of what will happen to your average price when more money is added. But you and I know that we already have settings whereby we're not going to rush to put that money. We're waiting for at least 3.5% first, you know. So, however, it appears that the Solana can still continue to pump, and yeah, that's it. So I don't know. I want us to stop recording this one. We'll upload it to help people understand average price, current price, also the importance. Let's please come out of this page so that we don't forget to click confirm. Otherwise, the system will buy, which is not our aim.